Good day, traders. I trust you are well and that you're having a pretty reasonable day in the market. So let's have a look at what is taking place and some present opportunities. Euro is very interesting, right from the open of the European markets there. I thought that was an interesting setup, potential short after wedge test of what was the high of the day. Decent enough reversal after the wedge top and the double top. But, when you're taking a trade like that, before you get a break and a close beneath the EMA, you need to have a wide stop. So when I took that trade, I had a 40 pip stop. Yeah, 40 pip stop. Sound of choppers going out. So the 40 pip stop at around that level. Then, of course, you got to watch out for the acceleration and hopefully get the acceleration. And didn't get the acceleration, so pull the stop down to half of a 0.25%, which is 0.14 as it turned out. I'm pretty negligible. Then the pullback got stopped out there, so no problem at all. What the market is trying to do now, tried to accelerate again to sell off, but failed. And it stayed above the 10 EMA. So even though there is two-sided price action, the fact that we're failing to break beneath the 10 EMA, which is our indicator of strength of a trend, just shows that the bulls have been strong. So these wedge patterns are good because they're showing us that the bears are in the market. If we do get a break beneath the 10 EMA, and we then get a lower high, we could expect that the market could go into a trading range or sell off. And this here would become clear that it was a bull leg in a trading range, two-sided price action. But we got to wait. I mean, every time the market has tried to break beneath the 10 EMA, bounced off the 20, accelerated up. So it's two-sided price action, but it is bullish price action. We could also draw in that channel. Bull channel just anchored at the top there. Or, when it started, let's take this out. So that's where the channel started. There are the channel lows. Tried to break out above that, and the bears who created that had the opportunity to then break beneath the channel and maybe go sideways and sell off. But a channel was created, so price has been contained within the channel. So even the sell-off, we can't do anything until we get to the 20 EMA and also the channel line, and see if the bears are able to break beneath it. If they're able to break out beneath it, which means breakout candle plus follow through, fantastic. Then we just wait for a pullback, lower high, and we can trade. But so far, price is contained in this channel. Let's just confirm that it will only show up on the 5-minute. So then if we go up to the daily. So remember, on the daily, as a five-minute trader, you've always got to look at the last 3 days at the very minimum. So you look at the whole price market structure, and you would have seen that we had this trading range here, 2-bar reversal, low, which was high of October, a low here, and a double top before we had this. And remember, we said whenever you see a trading range, you always got to say to yourself, if we break out above it, how far will, in this case, the bulls want to go? And we had the breakout, and the bulls want to go to a measured move, and they got to the measured move. Perfect test of the measured move. Bulls taking profit, bears trying to make the whole thing fail and collapse. So when you look at the last 3 days, that candle gives you a lot of information and wonder why we have a tail. Well, the bulls got to the measured move. So the absolute accuracy, more often than not, of measured moves, very high level of accuracy. That's why we had that tail in that selling off. And bears, of course, trying to make the whole thing fail, because if you look to the left, while we've broken out about the channel, there are so many key levels. That was a level, that high of August, a lower high. And that's why, we kind of got there, pulled back. Bears are defending that. They want the market to fail. And so far, leading up to yesterday, the bulls had failed to break out above that level. So bulls having failed to break out above that level, it gives the bears the opportunity to sell off. So we're still in a bear selling zone. Okay, this has been a bull trend. We've seen the measured move. You could also have put in the first leg, leg one. Okay, so there's the first leg. I'm measuring that to here, leg one, and the pullback is there, and the pullback. So first leg pullback, there is the extension. So we got to the extension and we failed to break out above it until today, when we have the market up there. Today is not yet over. There is still a lot that can happen. What the bears want for today is for the market to sell off and close below this level, which is the August high. Then the bears, they have a chance to control the market. The bulls, of course, want to break out above that, but they have big problems. There's the measured move where the bears came in yesterday. There's the high of that. It's a 1-bar doji. Whenever you have a 1-bar doji, you must mark the measured move. So there is a measured move. If the 1-bar doji, if the market breaks out above that, they want to get to that, which again, if you look to the left, is testing just these key levels, these key lower highs. So when you have a channel like this, the key lower highs are key levels of resistance that you must just mark in. Why do I have 2 lines here? One of them is this high here, which is the high of October, that micro double top. And that lower line is the measured move of this 1-bar doji. If the bears sell off, their goal is to get there. So you can see there are key levels of support that can pull the market down. So the daily time frame governs our experiences on the 5 minutes. So very important to keep that in mind. So we are in a bear kind of area. Yes, the buying is carrying on, but we must just keep watching. I mean, if you look at the buying taking place, I mean, very difficult to buy anywhere. You don't want to buy just beneath 10 EMA. Okay, but we're in a channel. If you were to buy there, the stop is down here. We pull back, we get doji sideways price action. If you want to buy above a doji sideways price action, very tricky. You can do that, but you need a wide stop. And when you do that, this is the challenge and the difficulty of trading channels. If you're buying here, you have to anticipate a deep pullback. Doesn't mean the market is reversing, but it's a channel. After failing to reverse at these double top levels, markets started creating a channel, goes up, deep pullback, goes up, deep pullback, goes up, deep pullback. Could do that the whole day, up a deep pullback, which means you need to be comfortable to take a trade, wait for the pullback and accelerate up. Alternatively, you can scalp, which I don't do. Buy when it looks like reverse and get out. Buy when it looks like reverse and get out. Buy again. That's not the way I prefer to trade. So Euro, I'm going to watch, and what I'm watching for is to see how this channel carries on up to that level, which is the high of yesterday. Might carry on channeling, and if the these are key US session levels, let's just show you that. We always mark key US session levels. So that's top of that bear breakout, key level. If we get up to here and the bulls are strong, they're going to break out above it. But have a look at what took place here. Huge bull candle, bad follow through and reversed. It's possible that we might get that at some point today, whether it's the news that's coming up in just less than 3 hours time from now. And then the market might turn. Okay, so they might get there, test that, and want to sell off. But as long as it's in a channel, if you are prepared, if you know what's happening, your stop is here, prepared to buy, up, deep pullback, that's fantastic. Otherwise, wait to see if the channel is broken, if the bears are strong to break the channel. Another alternative which might give you an opportunity, a better opportunity to buy. So that low, if we're looking to buy, this might give us a better opportunity to buy. If the bears break out beneath this channel, when the market comes to test this low of a pullback, because it's a bull channel, it's a strong bull channel, there's always two-side price action. If we break out beneath the channel the first time, the bulls will say, okay, let's create a double bottom. And from the double bottom, high low, we can still buy. So that happens, that would be an opportunity to get in the market. So waiting a bit on Euro, the other active market for this present session is the UK 100. I'm presently in a trade on the UK 100, which I took here. And again, because we are pretty close to the high of yesterday, so I've got a wide stop in it. And if we break out and close beneath these levels, that's a 50%, then I can pull my stop in. And I'll be comfortable to do that, because at that stage, if we break below here, I'll be looking for a pullback to test the EMA and another opportunity to get into the trade, to build my position. So I'll talk about the daily structure just now. So if the bears continue to sell off, we don't know if they want to do that, because we're at a key level here. Market could bounce and start to come back. So I'm just going to leave my stop up here. But if the bears break out beneath this level and close beneath it, so bears are strong, a pullback will come at some point. The market pulls back, profit taking, bulls trying to reverse it. So after that, if we get a pullback and we come back to test the EMA and get a decent enough reversal, that will be set up to add on to the trade. By that time, my stop will come to the nearest technical level, will be here or even just here. Okay. Then at that point, I'll be willing to scale into the trade and build the position up and see. As you're trying to build a position, you want to see bear strength. So if there's bear strength, I mean, let's see what 20 seconds to this bear strength, the market will break out beneath the 50% pullback of yesterday, pull back and keep going. Then, they'll target down here. And you don't want to be sitting in one trade. If it starts to sell off, then you want to start to build compound your profits, build into it. scale into profitable trades, rather, profitable positions. So a bit of thinking behind that. When I was in the Wednesdays at the market session, the UK Open with clients who are subscribed to that, I did speak that when we left, I think we were somewhere here. It was for me, and I said, well, if we get a lower high, then we must look to take that trade. We did get the lower high, but at that stage, with 3 candles, let me open that a little bit more. So that was to determine my stop, so I can take that out to keep my charts clean. So that was the trading range when I was taking the trade, and measured move is here, and you put your stop a little bit above the measured move. So I can just take that out to keep it clean. So while that was forming with that lower high, I was trying to figure out, do we have a wedge? We have a wedge. It's a bit of a truncated wedge, different structure of a wedge, but a wedge nonetheless. Why am I saying that? There is a double top here. So the market went up once to create that first top, pulled back, came up again, 2-bar reversal, second high. So that's a double top. And every time we get a breakout above a double top, it's a third push. So it's essentially 1, 2, 3 wedge. So I saw that whenever I see a wedge, when I'm looking for a lower high, I just want to see a bit of acceleration down before I sell. We didn't get the acceleration down. We had, but then it failed. But then we had another lower high doji. And when I saw that, plus that candle, which is one of the structures on, when you're taking second candle trades, a candle that completes a candle with a tail. So I was happy to take that. I mean, ideally, you can put an order in the market just before that. But as soon as I saw that, I just sold. At the market, reason I did that without putting the order, because I knew I was putting a wide stop into the market. So happy with the wide stop. Pulled back, not a problem, even if it's broken above this. Could I rely on that until it's finished? So as it is right now, we have to wait. It's still a reversal trade. And when you take reversal trades, high opportunities to get stopped out. So there's no rush to pull the stop down. I could quite legitimately just look at that kind of measured move and say, well, if I was taking a trade there, I'll do a measured move. We could do that. Okay, so that's a measured move where you could pull your stop. But that's not different really from, because you put it a little bit higher. That's not different to where we are at the moment. So leave that and let's see what happens. Now let's look at the daily and just kind of talk through some of this, and then we'll look at Hang Seng 50 and S&P. We'll look at S&P 500 first, because that's going to prepare us for the news coming and some things to look out for. So again, when you open your charts, you trade in lower time frame, you trade in the 5-minute. Just have a look at what's the structure that the market is presently in, just so that you get a sense of some probability direction. I say a sense of probability direction because until the market actually opens and the price starts to move in front of you, all you have is a sense of probability direction based on what you're seeing on the charts. You don't quite actually know what's going to happen until the charts come alive. But by looking at it before we had all of this, and of course, you'd have been tracking for a few days, you'd have seen this wedge being formed, 3 attempts by the bulls to get to new levels, first attempt, second attempt, third attempt. Every time they get a new level, sell off, new level, sell off, new level, sell off. There's a level here, which market came down once, went up, came down again, went up. So there's a bit of a double bottom, could even think of a wedge bottom that's here, a test of this level. So key levels here, which I've just marked. So somewhere key support in November 2022. So at some stage, if the market comes down here, I'm not going to be surprised if it starts to turn, okay, because it did that a few times in here. But even notice that, then you look at the last three candles as the day's opening. Market turned. Obviously, if you look to the left, there's nothing else except this huge big bear candle here, which was a double top, lower high double top after that turn. So you know that these bears that created this are in the market at this level. You can expect that. You also know, you can quick look, measured move of this trading range here, and we broke out above it, and we are in that measured move area. So within this particular area here that market is in, bulls who have just agonized and set through their trades. I mean, if you're a bull that took this trade and you put your stop here, you would have gotten to your one-to-one. That's what you're looking for. Okay, you're going to one-to-one. Now, something that I say repeatedly to traders is that if you take a trade, let's say only 5 minutes, if you have to go away somewhere and you know that the market gets to levels of support and resistance, test it, it might reverse. You don't want to come back after a couple of hours, 3-4 hours, and you've been stopped out. And when you look at the charts, you say that, man, look, I had all that profit at some stage, but then the market has pulled back. So if you have to go away, you set your take profit at that level. Okay. Not exactly there, just below, right? Just below that, you'd have come back and you would have banked your profit, missed out a bit more. But if you're in front of your charts, if you're actively in front of your charts, when the market gets there, there's no point putting a take profit there. Wait and observe and be willing and be prepared to give up a little bit of profit. So you get there, next day, oh my goodness, look at all the profit, then the sales off, profit is gone, but just hang in there. I mean, if it closes beneath here, you can close your trade. You've only lost a bit, but you have the chance to gain a little bit more because your objective is, hang on, if we don't turn here, now I can see this trading range. I want to see if we can get that far. So bulls who are taking this trade, who understand the price action, depending on how much they get in. I mean, I get in the quarter. Some guys may take 3-4 positions, quarter. So they got a full 1% in. And they say, when I get there, the first quarter, I just put a take profit on it. The other one they hold on to at some point, they take it off, or they could have taken, first quarter off somewhere. So there's different ways to do it. But in any case, we didn't take a take profit here. In this kind of bulls, seeing this tight channel going up, they just hold and hold. Now you can see two-sided price action, and you got to the measured move. So bulls, most bulls take off their profits now. So they're happy. I'm banking my profit. It's done. If it sets up again, I will jump into the market. At the very same level, the bears are saying, okay, we saw all of this. I'm a bear, I want to sell, but I'm seeing all this price action. I was hoping to, I added a little bit to the position here, got to the measured move, and I was hoping for a double top, and it's failed. I'm not going to sell anymore until I get a better price. So for the bears, they want the price to come as high as possible so they can sell off, because then they'll make a lot more money when they buy back the shorts at a low price. So bears start to climb in and start to sell. Bulls are taking profits. That's why we have that. And now today, as you go into the day, you would have wanted to see if bears will sell beneath that candle, bit of a tail, and continue selling until the bottom of the market. And there was a gap down, but it failed. The gap down failed. So we're going to go look at that now before then we go to S&P 500. I don't want to run out of time. So here, at the open of the day, the market pulled back and you're expecting the bears to have strength. So the bears gap down. I think we can see it a little better. So the bears did gap down from the close. And that's good for the bears. They have they have tasted blood. Say, hey man, we had enough at the open to sell this market and gap down and close beneath the low of yesterday. The bulls, of course, came back, scrambled back, buying back furiously. On the first candle, created a tail, which was a problem for the bears. So the bears who would have taken that particular trade now said, oh, problem, I should have waited a little bit more to see what happens. So it comes back into the range. If they'd taken that, their stop should have been above here. So they've been able to close their trades with little loss, In any case, then the markets started buying. Now, if this is, make some assumptions here, this is $10, $7. So I don't know daily traders where they put their entry in, but if they had sold, looking to sell that, they would still have been fine, because if you're taking a trade on the daily, breakout beneath here, you don't put your stop even where I've got it. Your stop is going to be above that level at the very least, because you look to the left, technical levels, the next one is there. So you can put your stop there, and hopefully any pullback, who cares? You're not worried about that. You hoping the market comes back there and sells off. So with that bearish mindset in mind, when you get a setup like that, put a small position in as 5-minute traders, 0.25%, not even any huge risk, nothing for us to worry about. And we just wait and see what happens. That's all we got to do now. S&P 500. Now, S&P 500, in the way that I traded on the 5-minute, becomes more and more important the more we start to move towards the US markets. So that's the biggest volume driver. So there's volumes in the market already, but when the US markets open, more volumes come in. So you've got the European markets, the UK markets, Asian markets already active. Then you get the US markets coming in, and you just get this massive splurge of volume in the market. So I'm not really too fast about looking at it until we get to the US markets, but I keep looking at it, I keep glancing at it. We might get a decent breakout forming, which you can jump into and hold on through the US session. I mean, there will be pullbacks, reversals, setups, all sorts of things until the US market is established. So you got to be prepared to do that. But let's have a look. Well, let's start off on the daily. So on the daily, we are here. If you just looked at the chart, and if you were taking a quiz and saying, well, what's the highest higher probability direction, just by looking at the chart? Chances are you'd say the higher probability direction is that this market will keep selling off. We've just been putting lower highs, lower highs, lower highs. Broke out above that level. What was that level? Measured February 2020 high to March 2020 low. Okay, so during that COVID spike, so that was measured move of it, which was reached. So we've been making lows, tried to break out above it, lows, lows, lows. At this level, we broke out above that. We keep selling, keep selling, keep selling, keep selling. We're breaking out above that level. We're nowhere near any of these levels. So the higher probability is that this market will continue to sell off. Just by looking at the overall structure on the daily. Then, if you drill down a little bit, this point here, this level that I've marked in gold so that it sticks out. I mean, if we are watching the charts since Monday, so Monday, Tuesday, Wednesday, and you would have seen, okay, big breakout, bulls with a strong, they should have just accelerated up, but anyway, still it was a bull candle that they put into the market, which is fine, still a bull candle, and the bull candle is still a follow-through. So a follow-through from a breakout doesn't have to be the same height, as long as it's a trend candle. So we don't want large tails on top like we had on that bear candle. So that's good for the bulls, and you kind of hope they keep on channeling up. But instead, we failed, and then yesterday, bulls had a huge opportunity to close anywhere above here. But we failed, and you wonder, why would the market turn at this level? Well, if you look any levels on the left, the only thing that's distinct is this huge bear candle. And whenever we get a huge bear candle, huge bull candle, whether it's at the open or news announcement or just a surprise, you're busy minding your own business, trying to find an opportunity, and out of nowhere, there's just this huge candle appears. Step back. If you're not stopped out, if you stopped out, that's perfectly fine. Your capital should be managed well, so there's no problem with that. You then have to go and look at the 50% pullback. Now, yesterday, where the market turned is spot on 50% of that huge bear candle. Now, that's quite fascinating. It just confirms the power of these invisible levels that you have to go and put in. So 50% pullback. When I looked at that, I said, what is happening? Because I didn't have it marked. And I said, why would the market turn there? Nothing is random. Let's have a look. The moment I saw that, I realized, oh, okay, 50% pullback, which I didn't leave in there. It should have. And that's what the market hit perfectly. So at that level, bears are coming in. They're defending half this range. They don't want the market to close above this, because if it does, it is erasing all the effort they put in to create that. That's why you had the small candle. That's why you had this dodgy candle. That's why you had that predominantly from there. The bulls were hoping for more. What the bulls were hoping for is to get up there. The bulls were hoping for that measured move. So the bulls that saw that, if they had bought here and were holding, and they saw that, they said, fantastic, we've broken above that. Bit of a follow through. Our goal is a measured move. And not a surprise that the measured move is there just below that, because that's where the bears will come in to defend. But the bulls would have been disappointed with yesterday. Strong bulls who understand how to structure their trades, would still be in trades. And this is where they would put their stops at best. Same kind of thinking, huge bull candle, 50% level, which is a test of that level as well. So if they had taken the trades here, their stops would have been here or here. By now, after that breakout, they pull their stops either to there or there. Because if you're in the trade, you don't want the market to come below this. If it comes here and tests and accelerates, you're fine with that, and that's 50%. So they could pull their stops up to just below that level and wait. And that's perfectly fine. They're in a bit of profit. Even if they took the trades here, they're in a lot more profit. Happy to give that away in case we get the chance to get to the measured move up there. So I'm hoping that the more I keep talking about these measured moves and where things are. It starts to make sense to you guys that you're starting to use them. You know, whichever of the strategies you've learned, price action is just a key driver, right? Price action, you can just overlay anything just to give you that additional insight into how the market is working. So as far as my high probability here, I'm looking to see the bears can continue selling off this market and see if we can break out beneath that low. So as I said, I want to wait a little bit more patiently. Double top already. So, you know, if you jumped into that with a measured move stop. So measured move stop is there. If you wanted a tighter stop, you put your line charts on. Just look at the closes. The market really respects the closes. So that could be the finest stop you could put in the market. And double top, you'd want a lower high. You get that outside candle functions as lower. So that was a double top. So that was a double top, and you still wait for a lower high. That would be the lower high. It doesn't have enough separation to make me happy. I would have preferred to wait a little bit more, and I probably would not have been triggered in because I don't like, I think, let me say, 1 or 2 candle separation. Effectively, it's an effective trade, but I would have liked to see that a little bit of a pullback, and let's jump in. If you take the trade here, unfortunately, because you're still taking that first trade, you still need to put that stop here, $20 stop. And then if the market goes down here, you pull the trades down. Okay, so I want to have a look at Hang Seng 50. So, okay, so my outlook, again, as far as S&P 500 is concerned, I am looking to sell. Now that the market is already selling off, that is fine. The 10 EMA will start to descend as an indicator of bear strength. If we close, we at these levels, if we close beneath this level, next couple of minutes, and if there's a follow-through candle, then you get a pullback to test the EMA. If you want to take that trade, you have to be comfortable, just to put that stop up here. UK 100. Okay, we are still in the trade. Now, I wasn't paying attention here, my apologies. So if you had, this is like what we're talking about on the S&P 500. If you hadn't taken that trade where I did, and you wanted to jump in, that would have been a perfect breakout pullback. That's as clean as you get in terms of signal to take a pullback, breakout pullback, low one. But your stop, just like I was saying on the S&P 500, your stop is not here. Your stop is still that technical level, so it's still 23. Now I go on UK 100, I've got 20 and 40 in terms of my stop levels. So if it's above 20, I'll have to put a 40 pip, $40 stop. Even if I pull it down, but I measure it as 40. So if it's here, it's just less, a little bit more than half. But that would have been a trade to take. I was not watching that. In any case, if we close again, like I mentioned, below these levels, this candle follow through, I'm comfortable to pull my stop down and then just leave it, irrespective of what happens with the news or whatever the case may be. Okay, Hang Seng 50. Hang Seng 50 is not much for us to do. We're stuck in the middle of the trading range of the day. What is interesting, when I was looking at this with the traders early on, and we observed this convergent triangle. And at that point, I said, if the market breaks out, comes back to the convergent triangle, and you might see if you get an opportunity to go up or sell off. But what's fascinating is that this convergent triangle is what it seems to have controlled the market so far. The apex, rather, of the convergent triangle. I mean, if we were to extend that convergent triangle. So we observed the convergent triangle before this happened. So price was converging to one point. And interesting enough, I said to the guys, well, with convergent triangles, the market will never just make one, remain in one band for the rest of the day. We did get a breakout. We came back to it, broke out beneath it, and we're just still within that zone. So the forces at the open of the day that created that convergent triangle are still controlling the market. Opportunities would have been that trade. That would have been a low probability trade because of the bull breakout from inside the converging triangle. If you had taken that, you would have to put your stop above here, which is fine. And you wait. I mean, your goal is to get to the apex of the convergent triangle. When it comes back to the convergent triangle, after a bull breakout, we are looking for a double bottom and then some form of higher low. So that was an attempt to create a double bottom. Unfortunately, we didn't get any acceleration from it. What we have wanted is 1 or 2 or 3 bull candles accelerating off it, and then come back and giving us a higher low or something to trade. Instead, we had a wedge bottom. Another attempt for a double bottom didn't work. We had a wedge bottom, and that wedge bottom 1, 2, 3 was also slightly lower low double bottom. And the first opportunity we identified in the second session would have been to buy above here. So you'd have bought above here, and your stop would have been down here. And we're going into the close of the second session, and I mentioned to the guys, you have a choice to make when you're going into a close, because when the market opens, who knows what the structure will be, might have gap ups or gap down. So we said, if you've taken, we had, let me just mark it quickly, the time that we have, that's important. So that just gives us a little bit more inputs in terms of decisions we must make before the market happens. So, oops. All right, let's do that. So that was the first opportunity to buy. Another one was to buy here. Both of these, your stop would have to be down here. And then you had the acceleration, but you're going into the close of the second session. You have a choice at that point to close your trades and say, I'm not going to risk gap ups or gap downs. And then I'll come back when the market reopens and see what the opportunities are. Or in this case, you quite legitimately quite right to say, okay, I'm going to take a chance because of this strength that the market will continue to go up, but I'm not closing my trade. My first trade from 2.5, I'm going to pull the stop all the way up to here. So now it's fractions, really little risk. If the market gaps down and stops me out, that's fine. That's fine. You had the gap down to test that entry, but you're not stopped out. Eventually, the market went up back to those levels. So you'd have still been in profit. At that point, you can pull your stop up to break even. And now, you just make a decision in terms of what to do. So quick wrap up, S&P 500, if we get bear strength, pull back to the EMA, decent enough to take, stop above here. UK 100, the next opportunity is if the bears continue to sell off and you get a pullback. I'll be looking to add into the trade if we get that. If we don't get that, then just wait. There's no need to do anything further. But hopefully, get some acceleration and pullback into the trade. Hang Seng 50, nothing to do there. Euro versus the dollar, we spoke about getting down to these levels. So you want to do anything here, looking to buy a test of that level, or you just wait to see what happens when you get way up here. All right, guys. Thank you for joining me. Look forward to catching up with you next week and seeing some of you guys later on in the US session. Marlon, thanks for hosting us. Appreciate it. Bye-bye.